Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and obviously I'll be the host for the next little bit of time here that we happen to go over the markets and a little bit of education. So, kind of throwing things in. Don't forget to email me if you got some questions or if you'd like to see certain things on this program. To that way we can tailor this to you and again make it fun for you to participate as well as watch. So, we'll go ahead and get this started here as I minimize myself and focus on the important things. First, we have a little disclosure, just letting you know that we are not registered brokers or investment advisors. I'll look at different securities, but from an educational standpoint. And I'm not telling you to buy or hold any particular securities. And there's always risk involved in the markets. No matter what we do, we can't eliminate risk. We can only try to minimize and manage it. And past performance is not indicative, of future results. So there's never any guarantees there. Don't put any money that you can't afford to lose into the markets. And we don't have any trading restrictions on us. We're not subject to any of those, so we can have a position in a security and initiate one at any time. So maybe I should leave these off. That way you don't get the reflection on the camera there or my glasses. Anyway, as I was mentioning, you can email me at the Wendell Effect at tradingmindsetassociation.com. Also follow me on Twitter at TraderBdub, and you can search for us. Well, you probably already found it, but the Wendell Effect on YouTube. And tradingmindsetassociation.com is the website where you can find me as well as many other very interesting videos talking about the markets and things you could do to improve yourself as a trader. So without further ado, we'll kind of jump into it. And just like last week, I'm going to continue on with the weekly market analysis, starting off with the equity index futures, and then talking a little bit about the equities in individual sectors, kind of seeing what the performance is like for those sectors and which ones you could take advantage of, kind of follow up a little bit after what happened last week. We'll also jump into the Indian markets and take a look at those as well as cryptos. And we'll finish off with chart school. So a little bit of education for you as well. And let's go ahead and get this started. So first, we're going to take a look at the, forgot to change the week there. It's not April 10th, obviously. And there we go, fix it, just as easy as that. So we got April 17th for the week. Anyway, kicking this off, we're going to take a look at what happened last week with the S&P. I mentioned that there was a bit of indecision here, and we started to have that completion to the downside. So we had that confirmation, I should say, where we made a lower high and lower low. The RSI never went above 60, so that was showing that we were going to be continuing our bearish move, and therefore probably will keep continuing it until we hit some sort of demand. So you can see this week we ended up, last week we ended up going down much, much further and faster and closed much lower than we did before. So what we're seeing is that the buying pressure, which is the bottom tail wick there, is getting smaller and smaller. So therefore we're getting less and less buying pressure, more selling pressure picking up. Keep an eye on the RSI. If we go below 60, we will take out that prior low here at about 41.50. If we don't go below 40 on the RSI on the bottom there, if we don't get below that as prices make our move down, then we'll probably get stuck a little bit sideways. But overall, we're looking pretty bearish. Dropping into the daily time frame, originally we had only pulled back about 38%. Now we're down to 50%, even exceeded that with our pullback this past week. Again, we want to see that we can get more momentum as we move down. If we get less momentum, look for sideways movement this week, maybe topping out of the 61.8% retracement. But if we get more momentum where the RSI goes lower than 40, then expect this to continue to collapse price-wise and even hit the 78.6 or even 100%, possibly even below. On the 4-hour chart, you can see we came down to the demand zone I had marked off last week. There is no fresh demand anywhere nearby. The nearest demand zone was here at 42.40, but it's already been tested. So if prices get bearish, we can go ahead and retrace over 100% of that move down and get maybe even below 4,100. So keep an eye out for that as the momentum is very, very weak right now. The NASDAQ, pretty much the same picture. We came off that weekly supply, made lower highs and lower lows for the last 2 weeks. Lots of selling pressure, no buying pressure. Only thing that's saving us is the momentum. The momentum isn't as strong. As you can see, we're having struggles getting below 40. But if we do end up pushing below 40, the NASDAQ will lead us lower and make fresh lows. So on the daily chart, same thing. You can see we've come down once again, and we are making very similar lows as we've done before on these daily, but we can't seem to get more momentum. So that's suggesting possibly some sideways movement or maybe even a small retracement back up to about 14,500 before we continue to go lower. On the 4 hour chart, it's kind of same thing. We're making these lows, but we're not really getting, well, we are getting some more momentum. It's not really as strong as I'd like to see. So this is showing a lot of bearishness, and we're likely to go down. This is not a fresh demand zone. It's already been tested. So it may just cause a little pause before prices continue lower. I'm actually going to look to see if we get a little bit of a pullback first before going short. It may not be all the way to the 213 level, it may only be up to 14,000 before we drop once again. But we're looking very bearish here on the NASDAQ. The Dow isn't looking as bad. You can see that we're definitely making new lows, but we're also leaving a lot of buying pressure there with the closes off the lows. So the Dow is fighting to stay up while the other markets are obviously moving very quickly to the downside. Looking at the daily chart, same picture. You can see that we've got mixed colors between the red and green. As we're trying to move down, it's moving down very slowly, almost like a corrective mode from this upward move. So not sure if that's going to be able to continue to push down or if we'll end up going a bit more sideways. If anything's going to stall, it's the Dow. And really, the Dow's stuck within a range right now, as you can see, between this demand at 34,000 and about 34.8 as the top of the sideways motion. So I'm not seeing anything telling us we're going to break out of that. So even if we see weakness or just somewhat of weakness in the NASDAQ and the S&P, the Dow's likely just travel along sideways and not really participate too much. The Russell weekly, it's pretty much the same picture as the other markets. It dropped, but notice the bullish pressure. We actually have a green candle and we stayed above 40. So that's a bullish sign for the small caps. The fact that we are seeing a little bit of buying pressure coming in is kind of interesting, meaning that the index may not be able to drop as well. And we see we bounced off a daily demand zone that I had marked off last week for us. So we actually came down, bounced off that demand, watch to see if we can push back up above 2042. This is likely to be an area we turn around where we have an overlap of these candles. So if we're retracing and we're going to continue down, this is likely to be the area right around 2042 to 2050 should be the area to kind of kick off the new downward movement. And once again, we need more momentum as we retest this low. We need to be lower than 40 on the RSI, otherwise it's likely to fail to break down. So keep an eye on that. On the 4-hour chart, you can see we just bounced through the zones. I had these zones picked out last week for us, and we filled it. That's basically what we did is we went right to our demand, then right to our supply. And you can see on the demand, we did go below 40, so supply stayed below 60. That's showing overall this is a correction that we're likely to impulse down again. If we move back down, we're likely to break the 1968 and go directly to the 1904 on all the selling pressure. It's now coming back in on the smaller time frame. So that's what I was seeing on the equity indexes. We can take a look to see sector performance. And basically, this was last week's sector performance. What we saw was the leader was the energy market. We also had a lot of safety kind of money going into utilities, healthcare, and staples. Well, this week it just increased. So we were at 10%, 9%, 18. We went to 13, a little less on healthcare, but much more on utilities. And let's see, what was last week here on energy? 43, and that's just gone higher. So still seeing that we are at or near the market peak. That's usually right what we see as the market's getting ready to drop, and kind of a precursor to the economy going into recession as well. So definitely seeing the leaders here, utilities and staples. So if we take a look at that energy market, we had a negative divergence last week and we pulled back just slightly. Now we've moved a little bit higher, but notice the momentum is lower. So that's a bigger divergence. That's suggesting we're going to get a pullback here pretty soon. And whether or not that'll be the end of the leadership of the energy sector is yet to be seen. But we're definitely going to be seeing some weakness this week, at least in the beginning of the week. So we took a look last week, and Oxy, I think, was one of our leaders there, Occidental Petroleum. So that's what we were looking at, where we had that nice move to the upside and getting ready to break out again potentially. And it actually did. Now, Schlumberger is the leader this week. So it's changed, it's rotated a little bit. Oxy's still pretty good. As you can see, everything's green, but Oxy isn't performing as well. It kind of cooled off a little bit. So looking at Oxy first, you can see that what Oxy did was pretty much just consolidate. And with the consolidation this week compared to last week, where we had that big green candle, you see we just had 4 days of sideways movement. That is likely to build up momentum to break out. And that's what we're possibly looking at now, because we had that sideways movement and cooling off of that run up where we failed to make a new high, but everything's still very bullish. So we're likely to see a breakout to the upside rather than down. If it does break down, keep an eye out for a false breakdown before it rallies. So I'm expecting prices to continue up, possibly past $64 on Oxy. The other leader, Schlumberger, that I just mentioned, is also doing the same thing. We had this large consolidation going on for a couple months now, and it looks as though we're trying to break that to the upside. I don't usually trade the breakout. I wait for a retest of that breakout point and then take the long. So I'll wait to see. We've got the close above the breakout point, wait to see a candle form that's not touching maybe on Monday, and then a retest of this area as demand for the entry with the stop down below. So moving on, the utilities were also very bullish, and we had PEG as one of the leaders, and that is at 1.66%. You can see it's cooled off as well. Utilities were extremely hot last week, not quite as hot this week, but still bullish. You can see on the daily chart what happened was last week we saw that the momentum was dying off with negative divergence. So we were left with that doji, but not more momentum. We had less. So you can see what happened this week. Monday, we cooled off and dropped quite a bit and then started stabilizing this week. Last week. So this week, we're likely to continue our march upwards towards that 77.71 for the index, for the XLU. One of the leaders, as I mentioned, PEG, also took a little bit of a breather. It was strong in the beginning part of the week. This is actually on an hourly chart, so we're looking at a smaller time frame here. So what I'm going to look for is a buying opportunity. Looks like we're kind of in a little bit of demand right now as we pulled back. You had rally, base, rally. So we might bounce off the 72.60. Anyway, my targets are going to be 73.68 and then 74.36 as we are actually, in this demand zone right now. We may actually bounce there rather than going all the way down to the 72.60 Fibonacci retracement. But this is looking very bullish. It's one of the more bullish stocks, but obviously you want to buy on the pullbacks to target those new highs. As far as also with the utilities, we have Acceleron Corporation, EXC, performing very, very well. And on Acceleron, let's see, this is on the daily chart from last week. We had a little bit of indecision as we started to rally off of prior highs. We actually hit our first target. And now I'm expecting to possibly pull back. We've got a little bit of a I guess it's kind of a hammer at the top there. And if we get a little bit of weakness coming in, we're likely to pull back maybe to these demand zones or to Fibonacci retracement. But this is a very powerful, strong stock. So I'm expecting new highs to be made. So here on the 4-hour chart, I'm identifying potential long opportunities at that 48.12 or 47.10, possibly the 48.66 Fibonacci level. It's not as strong as the demand zones, but it may give you an opportunity to join in on the strong trend when we get a pullback. So taking a look, let's see, was that the 4-hour? Oh, I'm sorry, this was last week. That's what I was expecting and predicting, my bad. And actually we did it. We pulled back to the demand zone. I forgot. I was showing you from last week and now I'm showing you from this week what has happened. So it did actually rally. It pulled back as I expected it to, and we did rally, but notice when we rallied, we lost momentum. In order to break out of prior highs, you need more momentum, not less. And since we have less momentum, we're actually going to be likely to fall down from this area. And since we're kind of weak, we've already hit this demand zone. Honestly, this is likely to fall down to the 47.10 now. So I'm thinking this is kind of a bearish harami where you have the small candle inside the large one. If we break the low of that bigger green candle, you're likely to see price movement down to the 47.10 for a pullback and maybe a shift in the trend altogether where we're getting lower highs and lower lows. On the consumer staples, you see we had a move to the upside and a bit of indecision and a divergence. That usually indicates a pullback in price. And that's exactly what we got. So we're looking here at the weekly chart last week and seeing that indecision. So coming into this week, you see we actually started pulling back a little bit, just looking for a pullback, that's all. And our correction is likely to take us to one of these fib levels, or maybe one that lines up with the demand zone. If we go back as deep as 50%, that 77.72 would actually be a good long entry for continuation of the upward trend. I don't think we're done with the staples yet. This is an index or a sector that usually rallies, especially when the markets start dropping more. So if we get that pullback, I'm actually looking for these as buying opportunities. as long as we stay above 60, I'm sorry, 40, you got to stay above 40 on the RSI for momentum. Diving in a little deeper, on the consumer staples or defensive, looks like people are drinking a little more. We got Molson Coors as one of the leaders in the sector. So you've got the beverages and 10% gain last week. You can see there it is. That big gain really just came on that last week. We broke out of these prior highs. And usually what happens when you have that breakout, you see you get a pullback before we go to new highs. Right there, breakout, pullback, new highs. So this is the same pattern. Breakout, expect the pullback before we go to the new highs at 59.33 eventually. So you have to look at a smaller time frame to see, oh, we're probably going to pull back to one of these demand zones. We have this 54.39. It's also just underneath the 23.6 retracement, or 55.73. So I'm going to look for pullbacks and signs of strength at those areas of demand before we go up higher, ultimately, again, reaching 59.33 as your target. So that's what I'm seeing on Molson. Just, it's been very, very hot, but every time it goes up, it pulls back a bit before it goes higher. Also, last week, I think we were looking at the consumer defensive and Target. So you can see last week we had Target doing that indecisive candle after it gapped up. We call that a shooting star, where you basically gapped up. If it gaps back down, it's very bearish. Well, looking at this week, let's see, that was on the daily chart. You can see that actually we did not gap back down. Let me move this out of the way if I can. There we go. So what happened was we didn't confirm it with a gap down. We ended up opening up pretty flat and just moving down a little bit before continuing higher. So the fact that we didn't gap down and leave that on an island by itself was not as bearish. So we actually were able to move higher both in price and momentum, and that suggests that Target is likely to continue its push higher. So we've broken out of this range. We might get a little pullback, but not much. I'm seeing higher prices coming in the future. Looking at Lamb Holdings, Lamb Weston Holdings, actually, this was also one of my picks from last week. I'd anticipated a pullback to the demand zone before we went higher. As you can see last week, we started having that selling pressure, but never broke the low of that candle, indicating we were going down. Instead, we broke upwards. It looks like Lamb is actually going to keep rising rather than pulling back. So unfortunately, didn't get an entry there, but we did identify a very bullish stock. Moving on to the Indian markets, we can take a look, see what's going on there. We had the Nifty starting to pull back after that indecision right there. You can see we actually confirmed, not like we did on that consumer staple stock where we end up going higher without making a low. Here we made the low. So that's confirming the pullback. And you notice on that pullback, we failed to get above 60. So that's extremely bearish for the Nifty. So looking at the daily, you can see very, very weak as we're pulling back. If we're going to turn around, it's got to do it here. That's a big if. If we break this demand zone at 422, we're probably going to keep going down until we reach the 16,458. So we're at a critical point right now that if we're going to continue to rally, we've got this indecision and the confirmation of the pullback, that's telling us we're likely to go down. So if we're likely to rally at all, it's got to do it now. Otherwise, if we break this demand, we're going to keep going down to that 16,500 level. That's where I'm seeing it going. On the 4-hour chart, again, same thing. We've got a retracement. We've already gone 23.6 into the demand zone, kind of ignored the Fibonacci's, and we'll probably just keep going down and maybe doing small bounces at the Fibonacci levels if we see that weakness coming in. Looking at Reliance, there's no help here. This has been the leading stock and usually is for the Nifty, and you can see that it is making lower highs and lower lows in price, and there's no demand until down here at 24.84. So we're likely to ignore the Fibonacci retracements and go right to that demand zone. That's going to send the Nifty lower. So keep an eye out for that. We're on the daily chart here, so that could take maybe a couple days to get down there, maybe even 3. But if it accelerates and we end up going through that demand, look out below, because there's not really much around until we hit that weekly demand, which has already been tested. And that's going to sink the Nifty if that happens. So a critical spot will be the 24.84 demand zone that we watch for first, just to see if we're going to be able to hold up on that demand zone. Okay. Continuing on in Reliance, again, not really much help here. We're seeing that, well, maybe a little bit, as we pulled back into a 4-hour demand area, although it's not the best looking one. The better one's down below. We didn't break 40, so there's a little bit of strength trying to hold us up, but not much. So keep an eye on that. If we break down, we were able to go down quite a bit. And like I said, that's the leader in the Nifty, and it's going to take the index lower as well. On the bank Nifty, we saw that we broke the low from the previous week. That's extremely bearish. I had this chart out saying, if we break that low, it's likely to keep going down. You can see we never got above 60. So on the daily chart, you can see we've got basically sideways movement after we broke down. So we're not really ready to break to the downside yet, but it looks like we're going to pause before we continue. Normally, whenever you get a pause like this, sideways motion, you often continue the move you were in before you paused. Well, we paused after a move down right there. We actually dropped and then gapped. So the fact that we're moving sideways suggests that we're likely to see a breakdown this week towards that 36,590 area of demand. Now, whether we'll bounce out of that or not, it depends on the momentum. If we have movement down where we've got a lot of momentum and it drives the RSI below 40, then we'll break that demand and move to the 34,273 target, which is a projection of the continued downward trend. If, however, we come into this demand and we're above 40 on the RSI, expect some sort of a bounce. And that can happen probably later in the week by the time we get there. Maybe it takes 2 days. It's going to take at least 2 to 3 days to reach that demand zone. So moving on into the digital world, we can take a look at some of the crypto markets that are out there. And looking at Bitcoin, we stalled out at my daily demand that I marked off last week, but we didn't go anywhere. And we're consolidating. Consolidation, I talked about that with the basing, usually leads to continuation of the move, which is down. So that's suggesting that Bitcoin could get below 34,000 or at least down to 34,000. There's no real demand there, but the measured move of basically duplicating the previous impulse after you break that consolidation takes us down pretty low. And we lost most of our momentum, but it's still somewhat bearish. So looking at the 4-hour Bitcoin, you can see immediately right here, we have that consolidation that could take us down to about 36,000, just under it is where our next area of demand happens to lie. So watch for the initial move down to take us to that area. Whether we continue, well, we'll have to see when we get there, see what kind of momentum we have. But that's what I'm looking at for this week, is that we're likely to see a breakdown. Watch out for any moves to the upside. There could be false breakouts, and there's a little bit of supply right above here at 42,000 to take us much lower if there's a false breakout. So that might happen too, where you break out, hit the supply, and then drop. Ethereum is pretty much doing the same thing. On the daily chart, you can see we've got consolidation, break, consolidation, getting ready to break back to the downside. And we got a little bit of demand here at 29.12. So we'll see if we break down to that level and consolidate again, or if we keep going. But the key thing is momentum. With the momentum dying off right now, as we move down, if momentum gets below 40 on the RSI on this daily chart, then expect us to move all the way down to the demand at 26.08. If, however, we come down to this 29.12 area and the RSI is still above 40, then we could bounce. But either way, I see bearishness coming up for the beginning of this week, and just keep an eye on that and look for better buying areas if you're trying to go long. This is not ready yet. On the 4-hour, you can get a little more detail here. You can see we had a false breakout up, slammed to the downside to punish. So we could do that again. If we break to the upside, we run into supply at 31.13 that could slam prices down, as I mentioned, into demand. And this one's at 27.96, basically 2,800 is where you're looking at for your next demand on Ethereum. XRP, pretty much same thing on a big scale here. You got consolidation going on, sideways movement, likely to rally up into 81.48 area of supply. You got kind of a drop-based drop before we continue lower, looking to wait and see if we can break out of this range. We don't have much demand below, so we could go much, much lower. On XRP 4-hour, let's see, that was the daily. On the 4-hour, we had basically, I thought it was going to be a breakout, but it was a false breakout. We ended up breaking to the upside here and overshot the supply a bit. So there's still some bullish pressure in XRP after that false breakdown on that kind of descending wedge. Usually wedges point the opposite direction they want to break anyway. So this broke legitimately upwards after a false breakdown. Well, the next target is 86, and that may be a little bit of strength coming in XRP. After we get this consolidation done, we could possibly break to the upside to reach that 86. Keep it on the momentum to know when it's getting to go. So if we start making higher highs and higher lows on the RSI, that may tell you this is a legitimate breakout then to towards that 86 from the 72 area. Cardano also consolidating. This one, however, is still looking bearish. So the only one that was looking bearish was the XRP. You can see we're consolidating before potentially another test of demand below, and this time breaking through. Solana is basing right now at demand. The longer it stays here, the more likely it is to kind of melt down towards 90.46. If it opens up and, well, today on Sunday, if it starts getting a little more bullish and breaks to the upside, you can see we didn't get very bearish on momentum. So it is possible for us to go all the way back up to this 130 level where you've got the origin of the previous move down. So we're kind of fighting to push back up on Solana, but it just hasn't happened yet. Keep an eye out. If it tries to break below 97 to go to 90, the only way you can do that is if the momentum drops as well. Luna is diverging or has diverged. You can see it made a lower low on the daily chart, but we made the higher low on the indicator and started to push back up. Overall, though, extremely bearish still on this. We stalled out at a tested area of demand. We've been here before multiple times. So if anything, if we do rally, we're not going to get above 92.16 before we push down, and we could drop all the way down to 50.54. There's nothing else to hold us there. So I'm looking for that 92.16 as a possible shorting opportunity on Luna if you can do it, targeting that 50.54. Or just, again, if you can't, just stay out. Don't try to go long. Fight that. Link is pretty much the same picture. You can see very bearish right now, doing a little pullback, but we were very, very bearish going below 40. Had a divergence leading to the pullback, but that 15.13 is a great opportunity to sell once again before we go down to the 12.07, and that's what I'm seeing on Link. So that'll pretty much wrap it up for the cryptos. If you got any more questions, again, you can text me or email me and follow me on Twitter, wherever. We're going to jump into chart school now and go over a little bit of education when it comes to looking at multiple time frame analysis. And basically, I use zones to trade, and I've talked a little bit about them in the past, and I'll continue to go over more of those in the future. But demand zones can be used either to enter a long or to exit a short, and supply zones can be used to enter a short or to exit a long. And what you need to look at is the proper perspective to kind of know which way you're supposed to trade, long or short. So the trend tells us exactly which direction to trade, and the field of play gives us an area that tells us where the trends are likely to reverse or pause. So basically, you got to determine the time frame that you want to enter and exit your positions on. That's your trading time frame. And what happens is all the other time frames are going to be related to that one, so they're influencing it. And what we look at is Dr. Alexander Elder. I've mentioned this before. He influenced me, and he uses a factor of 5 and fudges it sometimes with 4 or 6. So I want to use connected, related time frames. So I try to use a factor of 5 when I'm looking at the time frames. So the lower time frame that you're trading on is your zone time frame. That's where I'm finding my entries and my exits on my zones. However, I need to know the trend, and the trend that's going to influence me is whatever time frame I'm trading on multiplied by 4, 5, or 6. And that then gives me my trend time frame. Well, the trends don't go on forever, which they did sometimes. So if we want to know where the trend is going to end, we take that trend time frame and multiply it by 4, 5, or 6. And it doesn't have to be the same number. It doesn't have to be 4 and 4. It could be 4 and 5, or 5 and 6, or 6 and 4. It doesn't matter. Okay? But you multiply that trend time frame by 4, 5, or 6. Now you have your perspective time frame, which gives you an overview and a perspective of what's happening in the price action during the time you're going to be involved with the markets. So you can see these are just examples. They're not set in stone, but if I want to trade on a 1-minute chart for some intraday quick scalps, I'll use a 5-minute for the trend, 30-minute for perspective. If I want to do some intraday trades, I can do 15-minute for my zone and then focus on the 60-minute trend to let me know which direction to trade, and then the 4-hour time frame for the field of play for perspective. Or if I want to do some investing, I can do daily, weekly, monthly, or weekly, monthly, monthly. Notice I didn't skip there. I don't go higher than a month for the time frames. It really doesn't work out that well. But anyway, you can use whatever time frames you want. Some people trade on share-based charts or tick charts. And again, you could do the same thing, multiply by 4, 5, or 6, and get the perspectives that you need to be able to view price properly. So we're going to start off with the zone time frame. And the reason why I always start off small is I want to make sure there's zones nearby that I can trade. If there's no zones nearby, then I'm going to move on to something else. Okay. Some people start off on the high time frame and work their way down. That's fine too if you want to. It doesn't really matter. But trend is not important on this time frame. I couldn't care less which way the trend is going here. What I care about are the zones. So I'm going to mark off one of two different types of buy zones or demand, either what's called a drop-based rally or a rally-based rally. And I'm going to mark off the lowest point in that basing and then the top of the bodies of the basing candles. The only exception to that is if I have one basing candle, I go wick to wick. So if you want to learn more about how I actually do that, I've got all the documentation and the lessons on how to find the zones and pick them out properly in my e-mini think tank. So you can contact me for the information on how to join me there, but I have lots of details and a lot of examples that I go over on a regular basis there as well. Now, if you're looking for a sell zone, again, either for an exit or for a short, you're going to look for a rally-based drop or drop-based drop, and there are specific patterns we're looking for. We're going to mark the highest point in that formation for the top, and then the bottom line is going to be the bottom of the basing candles there. If it's only one basing candle, I go wick to wick. So very strict in the rules. That way I can repeat it over and over again and have consistency when it comes to the trading. So once I've found the zones to trade, I need to know, okay, am I buying or am I selling? That's a function of the trend that I am in. So now I'm going to look at the trend time frame, which again is just taking that smaller time frame, multiplying by 4 or 5 or 6. In order to find the proper trend that we're operating in, I check the color of the candles. Try to keep it simple. We talked about color, shape, size, location, right? When you look at the color of the candles, if you're seeing mostly green, you're probably in an uptrend. Keep it simple. If you're seeing mostly red, you're probably in a downtrend. And if you're seeing it looks like Christmas, red and green mix, you're probably in a sideways or choppy trend. My mentor once told me to look back about 200 candles to get an idea of the overall trend. So that way you can see the proper perspective. And that's what I've been using. So if you need to, you can draw out trend lines or use moving averages. Whatever you need to help you with the trend, you can use. And we do that on the trend time frame. And once I know that we're in an uptrend, I'm simply going to look for opportunities to buy on pullbacks to areas of demand or sell on rallies up to supply. That's it. You can trade counter trend, but those counter trend trades are a little riskier. You want to be careful with that. Especially if you're new, you're probably better off just trading with the trend only. But you can trade against it, you just got to be careful. That's all. And then finally, we want to look at the perspective time frame. Again, some people start on the higher one first and work their way down. And there's no one right way to do it. It's whatever you're most comfortable with. So if we look at the perspective time frame, we want to know, where are their major buy and sell zones, demand and supply. We're looking for that again. And the reason why is twofold. Number one, the supply and demand from this higher time frame usually halt the trends from the intermediate or trend time frame. And additionally, they can be used for targets. If I'm taking profits at my first opposing zone just to lock in some profits, why not let your winners run until they hit the end of the trend? You're going to make more for every one trade you take. And that's a key thing. You don't want to cut your profits short. I see a lot of people now, there's some sort of a trend now for some people that they are taking their profits once they get 1-to-1, one risk to reward, they take a profit. That's dumb. You might take a lot of wins, but the wins are so small that if you take a big loss, you got no chance. You got to be right more than you're wrong if you're doing that. I want to have very few trades, but a lot of winners when I'm right, and let those winners run. So my first target is at least 3-to-1 reward to risk, and then from there, I just let it run until the trend ends. We always have a trailing stop to take you out if you need to. It's not a big deal. If the trend changes, you get out. Anyway, I'm going to mark the zones on this time frame the same way I did on the lower time frame as well, that zone time frame. So overall, if we're moving in a downward trend, right there, if I'm in a downward trend, I'm going to focus on shorting on my zone time frame. When we come into supply zones, I'll short. And I'll stay short. If this is my entry for my short, target number one might be the next opposing zone But target 2 is not going to be until I hit the bottom of the overall trend, which would be the demand zone from that prospective time frame. Then we start going long on pullbacks to areas of demand. Well, my first target could be my first opposing zone, but why not try to hold on until the trend ends? The trailing stop will take you out if it ends early. But we know where the trend's likely to end. It's likely to end at the supply from that higher perspective time frame. So we want to get as big winners as we possibly can. And that's it. Once we see the trends reversing, now we focus on the shorts. We're going to sell at supply. If we get down to that demand zone from the highest time frame perspective, we're likely to move back up. Again, we focus on the longs on pullbacks to areas of demand. And just keep repeating. So in entering the trade, again, we're going to buy at demand zones on pullbacks, or you could possibly take breakouts of supply if you're in an uptrend. If you're in a downtrend on the trend time frame, you're going to look to sell short on rallies to supply or breakdowns of demand. And that's it. And we want to set our position up. We put in our entry based on the zone time frame zones. Our first target is going to be the first opposing zone on the zone time frame I just mentioned, but our second target will be from the perspective time frame. So if I take this out, let's see, we can go to a chart here. Let's go to a stock maybe. I can go to target. Doesn't really matter what stock. So as obviously looking at this, you know what? No, it's fine. We can do this. Let's go to an intraday opportunity. I'll say we're here on the daily chart. Actually, on the daily chart, looks like we might have a little bit of supply right here coming up, but we're not there yet. This is the daily. I'm going to look and see. We have a good demand zone here. Looks like maybe, nope, that's not it either. Might not be a good demand zone nearby, but honestly, I don't care. I don't really need demand because my trend, if it's up, I only need to know where the trend's going to end. So this is my perspective time frame. So what I'm doing right now is right here, we're on perspective time frame daily. So I'm actually going from the top down this time. So I'm going to go down to the 4-hour chart. And that's my trend time frame. And you guessed it, if I go down to my trading time frame or zone time frame, that's going to be 60-minute. And I'll show you an example on my way up too, but this is on the way down. So if we look at the trend right now, we can see, well, it's not a great trend, but we have higher lows, higher highs. We kind of broke out of the consolidation. RSI is above 60. We'll say we're in an uptrend. And again, the uptrend's not likely to end until we hit the higher time frame supply. So we label that as higher time frame supply. Now we can go down to that 60-minute time frame and figure out if I'm going to play this target, where am I going to buy it? Well, we're going to buy on pullbacks to areas of demand. That's it. So we look left and down from current price, and I actually noticed this is an area of demand right here. Change the color again. So I've got a demand zone. I got to find supply. And we work our way back until we see price. There it is. And I don't think I really have any supply nearby. Nope, first supply is actually the higher time frame in this case, which is fine. We can trade that too. So overall, what I'm looking at now is we're in an uptrend, so I'm going to look to buy. Where am I going to buy? Only if we pull back to an area of demand. I'd place my stop down below that demand zone based on the volatility of the security that I want to put in, or how much risk I'm willing to take. And target would be before we hit that overhead supply. There we go. So I have an opportunity. Now we can take a look at let's do a future. Okay, so maybe I'll go into crude oil. And obviously I've done some research on crude oil, but let's start off on the small time frame. Let's do a 15-minute chart and work our way up. Okay, so first things first, I start off on my 15-minute chart and I look for zones. Let's see, do we have a zone right here? Yes. Looks as though we have one right there. Rally, base, and rally with follow through. For our supply zone, 07, we're going to have to look back a little bit. And we're in a zone right now. Appears. Although we were here a lot, that's not really going to work too well as a zone because we spent too much time there, right? So I'm going to look for a better zone by continuing to look higher. These have already been tested. So we'll keep going until we find something that's unused and fresh. There's nothing great here, to be honest with you. Just maybe, drop-based drop. I was considering that. You can see the selling pressure comes up right here. It didn't really have much follow through, but we did break a prior low right here, so keep an eye on that. And honestly, right above it too, you have kind of drop-based drop. I don't know. And we got another zone right there. I believe. Yeah, it looks pretty good. So go to current price. And again, refresh. There we go. So now I've got zones. What do I do with them? Am I supposed to be shorting? Am I supposed to be buying? Well, the trend tells me. So again, we're starting off right now on the zone time frame, which in this case is 15-minute. Then we're going to go to the trend time frame, which I will use a 60-minute times 4. And then the perspective time frame, which would be my 240 4-hour. So I actually am multiplying by 4 and by 4. No big deal. So we go to the 60. Okay. Refresh this. And we look at the trend. Well, immediately it looks as though we're in an uptrend, right? I could zoom back and see, yeah, we had a big move down, but then recently have been rallying up with higher lows and higher highs. That looks bullish. So I would say we're going to be buying on areas of demand as long as the trend is likely to continue. How do I know when the trend's going to end? Let's go to the 4-hour zone and see where our overhead supply might be. So we start at current price. And before I go any further, let's just take a look back here. Notice that's where that uptrend began, right here. So why do we turn around there? Okay, remember, we had an uptrend that started on the 60-minute time frame. Why? Well, you can see the 4-hour trend also reversed there. Was that because there was demand in that area? And you look back and you see, yeah, this was definitely an area where prices had stopped moving down and rallied from before. I don't know if it was the best of demand zones. It looks like it was already used. This is the origin of the zone right there. But it was a zone nonetheless. You can see we end up using a second time and bouncing. We also had what's called positive divergence. I'll talk about that another time. But even though we coming into that zone for the second time, the divergence kind of helped give it away that was likely to bounce. Either way, I don't care about that anymore because we're in the uptrend on the 60-minute time frame, so I need to know where we're going to stop and reverse. And unfortunately, we are in supply right now. Uh-oh. That's rally, base, and drop on this 4-hour time frame that we're coming into right now. So that means we're at the end of their move, and we're likely to see a reversal of trend. Not only are we likely to see a reversal of trend, but take a look at this. Prices are trying to move up, but we're not really getting momentum with us, are we? Yikes. So instead of trying to buy, this may actually be a breakdown point where the trend is going to reverse. So I probably just saved myself a lot of headache and loss by not trying to take a long here, because overall, in the bigger perspective, it looks like the trend might be getting ready to move back down again. So that's an example of a move up. Again, we got surprised. The drawbacks of working your way down is that by the time you get to the lower time frame, you might have found a good perspective time and a good trend, but there are no zones nearby to trade. And the drawback of working your way up from the lower time frame is I found good zones nearby, but I can't trade them because the overall perspective is telling me we're likely to be changing trends. Unfortunately, when I go back down to that 15-minute time frame, since I didn't have any great selling areas right nearby, I can't go short here. I have to wait for a new zone and the trend to change so that way I can start shorting. And what I'll look for is on that 60-minute time frame, which I'm on right now, when we make lower highs and lower lows and we're in the downtrend, I have the permission from the markets to go short at that point. And that's what I'll look for. And then on the 15-minute, I'll look for my supply. So if you want to learn more about how this works, again, you can join me in the E-mini Think Tank. I go into much more detail there. And, sorry, it looks like my camera froze on me. Apologize for that. It happens. Not sure why, but it has. And let's restart it real quick. Anyway, if you enjoyed this video, please hit subscribe and like and let us know. And of course, you can always comment and let us know what you thought about it as well. And I'll be back again, hopefully next week, with my camera working here as I'm trying to get it back up and loaded. But, the most important thing is you were able to see the charts. There we go. And I can do this as well. So, welcome. There we go. But thank you all for being here, and I hope you enjoy this. Until next time, trade safe, trade well, and take care, everybody.